Okay, good evening, everyone. Welcome to December. Today's date is on the 6th of December 2023, and the time is about 5 p.m. as we speak after 5. I just want to talk about what is happening in the market because some of my friends will be having one or two arguments. You know what I do at Vision X. I don't like involving myself with the noise of the lower time frame, but when it comes to the bragging right of price action, I know I can, use my hands to knock my chest down. For the past 5 years, all I've been studying is just price action, liquidities, the manipulation processes. I'm just, I usually say this, I am like an investigative journalist in this business. So for me to know what is happening in the business, I need to know what price is doing at every particular minute, every particular time. It helps me in my, my options trading market. I've been trading options for a very long time. So I don't want to make this video very, very long. I just want to talk about what is happening right now generally, why a lot of people are leaving and coming, and few people are writing me that was up. And a friend of mine is currently right now telling me that gold is going down. I'm telling him that wait, there's liquidity concept happening. You can't sit down the daily, you can't sit down the weekly, you can't sit down the 4 hourly chart. I get what is happening right now. So for you to see that, you have to drop to the lower time frame. I even went as far as this morning trading the 1 minute time frame and the 5 minutes time frame. Whatever we can see, you can let me drop to the lower time frame so that you can see. I usually say that when you want to trend the weekly time frame, stay on the 4 hourly time frame. Don't stress yourself going to a higher time frame, or you can use a daily time frame for a clear understanding. So the understanding I have right now in this market is that first of all, we know that we have an ABCD harmonic pattern. Where are you? From the downside. I guess, and let me just do a recap. I love doing this recap. We know we have an ABCD harmonic pattern on the downside, which did a corrective wave of an Elliott correction wave. After an impulse, you have your retracement, which did an Elliott corrective wave of Elliott wave ABC move of what's it called? To the downside to major support. Let me take these two out since you know that this was an ABCD harmonic pattern. What does ABCD harmonic pattern does? What does it do? It does a correction, and let's even remove these what's it called? Elliott wave correction. Whenever you see an ABC harmonic pattern and is doing a correction to the downside, are you guessing it? If it does not break below a major area of value, probably a major support and resistance, know that that market has done what? Continued a massive buy to the upside. So if you're in this market, normally after seeing this bullish confirmation, what do? You just trade to the next level. And that was how we got our buy from 1,800 all the way to 2,100. And how did we get it? If I take all these things off, it's just, using your area, what's it called, Fibonacci extension. Because from our Fibonacci tools, we know that we perfectly came to our Q zone. And yes, in our Q zone, which corresponded with a major area of value. This was our previous this was the previous resistance and turn support. So when we come back to those kind of areas and the market is holding for those support and resistance traders, you should know that you should buy. But professionally, and someone that has been in this market, you went to the University of Trading, you should know what is going to happen here next. Are you guessing it? So it's just since you know that we came back to this major Fibonacci retracement zones and we held corresponding with all your confluences and your, every confluences you think you can bring to the market. You should know that this market should extend with your Fibonacci trend extension to the upside. So this was how we got our next impulse. So as it stands, gold is still massively bullish, because when the market comes to these sort of areas, first take probably 0.618, it tends to reverse back to any major resistance. So where are we right now? That's the question everybody's asking, and some of my friends are asking me that, guy, you are so versatile in this market. So first of all, what I've just identified is this bullish, bullish market. Know that we are in a bullish, what's it called? ABCD harmonic pattern that did an ABC correction move to the downside and perfectly held. So this is under impulse. Are you guessing? So how do you know that's an impulse again? When we have what? A break of structure. when we do what, we have a break of structure to the upside. So we broke structure to the upside. And aside from that, I want to show you something. Like everybody was like, the mainstream media was telling everybody that, oh, we had a major buy from $2,000 to $2,136, and immediately the market did what? The market sold to the downside aggressively. And the reason why we took a sell, I think yesterday, we took a sell from 1970 to 1940, from 1939 again to 90, 2000, sorry, those figures are not correct. We took a sell from 2020. We took a sale from 2070 all the way to 2040. Sorry, I will pass through, to 1919 something. So those configures mess with my head. So we took a sale from 2070 to, because the market actually expanded immediately the December 1st, I think, straight to the upside. I think, where was this date? The market actually, okay, December 4th. Asian session, that 1 hour, it just expanded and took everybody out. And what did it take out? These liquidities we'll be talking about. So when you're trading, you just have to look at every other thing. If you know that this market has been trying, I've been talking about taking all these liquidity stop losses. So let me use the word stop losses, because a lot of people are failing to understand what the word liquidity means. A lot of people were in the month of 2020, in the year 2020, 3 years ago, a lot of people were shorting this market. Position traders, some position traders trade for 10 years, leave their position to run for 10 years. Are you getting me? So I want to make this video as simple as possible, as short as possible, but I have to talk about everything happening sometimes. You get it. A lot of people were shorting this market all the way to the downside. Whether I like it or not, a lot of people's trade are still might have died, might have, been sick, might have been just there, might have forgotten. These banks likes all taking all these monies. Are you getting? Because they are free monies. A lot of shots were entered in these areas. Are you getting it? And their stop losses were placed in these, areas in the 2020, in the year 2022, now in the year 2023, May, we got there again. So whenever you see all these weeks, know that they are liquidities and stop losses are those places, billions of dollars. So immediately those billions of dollars were taken, are you getting it? Those money has to leave the entire good market into the purse of those market makers that brought out this, brought this movement to the upside. So liquidity must be taken. Since that liquidity was taken, these are billions of dollars, 3 years. What do you expect? The market should sell aggressively to the downside. That was why. So I was just trying to explain what happened. That was why you saw that we had this expansion to the upside. And within, what's it called? Within an hour to 2 hours, within 10 hours, we sold over 100 from 2000, I'm talking about $2,147 all the way down to $2,010. Are you getting this? And everybody was asking why? Why did it happen? The reason why it happened was because billions of dollars left the market, if not even a trillion. Billions of dollars left the market. Over $100 left the gold market. So that is enough to bring this trade down back to where the next support. So if you are a market structure trader, someone that knows how to trend the market perfectly well or very well, if you're asking yourself what is happening right now, you should follow what the market itself and follow the trend. So if you can take all these things off again and just do a proper, live analysis, I like taking all my tools out, all my, drawings out, and just run through the market again. So all I know we have in this market, first of all, is this concept to go and take everybody out. So the first thing that happened was, me knowing that this was an area as in on a higher time frame. This was the previous resistance and strong support. So if the market comes to these areas again on the higher time frame and holds, I don't even need to, go to my lower time frame. You'll just go to my lower time frame to find what entries. So what am I trying to explain? When the market comes to this sort of areas and hold, a lot of people just buy and put a lot of money into it, even 1,000 pips sometimes. Like if the market goes below here, you should know that what the market has done, what are you getting it? The market has done what broken this support, and a lot of people put, take trades and put their stop loss above here to continue going. Like, all these markets, you should understand this concept. I don't need to make all those, go back to those explanations again. I just want to try and make this video very, very, clean and fast. When the market go to these areas, we bought, and not just bought, aggressively. The market bought what? Aggressively. So when you are seeing what price is doing, you should know that it's just a minor retracement. But let's put, all the tools and what you've learned throughout your trading career to it. We all know that, I've been talking about this ABCD harmonic pattern with an Elliott wave correction to the downside, which perfectly fine suppose. So the market should continue going. That means that this market is what extremely bullish. And for you to find out that the market is extremely bullish, you can check all your confluences, you can bring in your EMAs. Are you getting my EMAs are perfectly corresponding, are helping 50 and 20 EMA. Thank you very much. Anyone that created that particular what's it called? That tool. Are you getting? Let me take the EMA off so that it's not confuse everybody. Let's just drive the market with price action. When the price was coming down since the month of May, the market was just sluggish inside this downward sloping what's it called? Downward inside this channel. The market was coming inside this channel. And when you are seeing this kind of sloppy movement inside the channel, even if it takes months, that's telling you that these sellers, there are not much sellers in the market. If you look at the higher time frame perspective, are you getting? There are no more sellers in the market. What happens next if you are a serious or a good price action trader? You should know that this is an impulse, a retracement, an impulse again. Are you getting a break of structure? So coming back down here to find support and not breaking down to change character to the downside, are you getting? You should know that the market will definitely come and take out this next. Are you getting? So what am I trying to explain? We know that this is what's it called? What's this called? A downward sloping, a downward. Let me just say a downward movement channel, which is a bullish continuation pattern. So if this is truly a bullish continuation pattern, how do you identify the next movement? We all know that this was an impulse, a retracement on the downside, an impulse, a retracement, an impulse. Are you getting it? And there was no supply around this area again. So for sellers not to be in that particular place, are you getting it? For sellers not to be in that particular place, and this is actually a bullish reversal if here holds and come to break here, you should apply all your knowledge. These are times where you don't, make errors or mistakes. Are you getting? These are times where you don't make errors or mistakes or get carried away. How? By not identifying whatever is happening here right now. So we've identified that, okay, this market is bullish from here, and for it to continue to the downside, the market needs to do what? Come back or come here, continue trending to the downside like this. But immediately the market, instead of making lower lows, lower highs, the market actually came here and made a higher high. But this was a low. Sorry, this was a high. Are you getting it? We had a lower low, then we had a lower high, right? We had on that lower low, because what I like is a break of structure. We had on that lower high, right? We had on that lower low here. So the market should continue lower low, then on that lower high, right? But instead of, trading and continuing this market like this, the market actually created on that higher high. So for you to create on that higher high, you should know that the market has changed back to the upside. So right now, what is happening in the market right now conclusively is that the market is extremely bullish. Right now, the market is extremely bullish. So for us breaking above, let me bring those things back. For us breaking above, I usually use one word. I usually say that the market has done was switched or changed, character to the upside with that particular place. So since we have a change your character, what is the rule of, every change of character? That market must not go below. If the market is actually aggressively bullish and is bullish, the market should not go below 0.38 retracement zone, or if it wants to give assurance to the buyers in the market, it should not go below 0.382, or probably maybe a fundamental day. I don't care about fundamentals, because before fundamental happens, these people are already programmed what will happen for you. Are you getting it? So the reason why this sell is happening, I've told you before. So right now, did it actually come to 0.382? You always see me mentioning this, where it's like, okay, for if you not buy from down here, wait for the market to break above you know, what's it called? A particular sharp pattern, and it broke above. So if it broke above, let's, you know, that's when we'll now find a switch again on the lower time frame. And on the lower time frame, let me come to the 1 hour time frame. What I was looking for is the market, you know, finding a way to do what? You know, break below again. And what did it do? It did a head and shoulders pattern that if you break down, check the breakdown, it corresponded with wherever it expanded to, and a 0.382 retracement zone. So let me go back to the daily time frame so that we can continue whatever we're explaining here. The market should not do what? Come below 0.382. That was the rule I've ever given in this, you know, these scenarios. The rule is that once the market switched to the upside, you claim that, okay, you're broken above a particular and change character, a particular lower hair. Definitely, you have switched the market to the upside. So the moment we are coming back to 0.382, this is when I started preparing for another entry. That's if I don't enter from here. Remember, I don't go less than the 4-hourly time frame on the trend, my weekly time frame. So it's clearer when you're on the 4-hourly time frame, because that's where you now start seeing all your what sharp patterns happening. So for me to know that, okay, 0.382 will hold, I will need another, you know, what's it called? What the market using, you know, moving from one phase to the other, what they call it. It's called short patterns. Are you getting it? Reversal short patterns, or wherever you've learned your candlesticks, it will tell you whatever the market has what done, switch to the upside. So the market actually got, you know, after breaking structure to the upside, market actually used a head and shoulders pattern to switch to the downside, which extended to that 0.382. So I need a switch back with a 100% assurance. So if I'm buying from 0.382, I'm careful getting it with my lot size. So if I was to use maybe a 5 lot size, I will start entering 1 lot. Are you getting it? Start entering 2 lots when you're next start seeing this shift. But I need something called a reversal short pattern before I can be able to, conclude that yes, this market has moved to the upside. So previously we had this, head and shoulders pattern. Are you getting it? So if you extend the head and shoulders pattern, you should know that this is under, a support and resistance area again. So what did you see? Now, what can you see? It did another head and shoulders pattern to reverse from that 0.382, broke to the upside, retested perfectly. So this is your major entry. This is on that entry. Are you getting it? So if you look at my Telegram channel, you will see a trade that enters from this area. Are you getting 1932, 1939, 1945 dollar area? Are you getting it? We were talking about it before, so I don't need to go back there. So immediately I saw these breakout traders. Are you getting that? Some people just look for these patterns and trade the little breakouts they see. Some people look for this and trade this kind of, and say, okay, let me trade the breakout. And they traded the breakout. They took about 1969, maybe 1970, all the way to 1936. That's about 300 pips to the downside. So it's not small money also. Are you getting it? Those are not small monies also in the market. Are you getting it? They are not small money also, but we're talking about the market switching what back to the upside. And immediately we go to 0.382. We are looking for something that would tell us that, okay, this market is indeed coming to do what? Break another, since it has changed to the upside, to continue breaking structure to the upside. So even if you are, what's it called, a higher time frame trader or a swing trader, you should know that since we have actually done what, switch to the upside and retracing to 0.382, definitely you should take a buy from here, and take profit from here from 1930. Let me just say 1935 or 1932, 1970, 37. We took that to all the way to MC, all the way to 2070, 2080. You should know that that's a lot. But why we took $2,100 take profit is because I know that immediately we are switching to the upside. Are you getting me? That immediately we are switching to the upside. First of all, I have 2 things in mind all this while. What are those things? Knowing that anything that makes this market to switch to the upside, we are coming to take all this liquidities out. Are you getting? So for us to take that liquidity out, we should know that my take profit should be expanded. I should not waste over what's it called 200 pips to the upside. So aside from that, there are things I apply again, that if a market actually did what? Retrace, as in, let me just call it change character to the upside. Are you getting it? A new market that's turned bullish again should do what? Now the market has switched to the upside and has turned bullish again from 0.382. So I know gold does that very well. I don't know about other assets. I know gold does that very well. So if a market can be able to switch to the upside and retrace to 0.382, the trend extension must get to 0.786. Are you getting it? You know, we have to take profit addition X. The first one is 0.618 and the second one is 0.786. So if it's retracing just to 0.38, it should get to 0.786. And what price is doing should let you know that it will definitely get there, because these are green days. How many days? All the way from October 4th, I guess, all the way from October 6th to the what's it called? October 30th. We're so green. It feels red. So that should tell you that price is still has changed to the upside and massively bullish. And we got a reversal pattern on the lower time frame here again, giving us an entry from 1966, 1967 entry, breaking to the upside. So bring your Fibonacci trade extension tools in. I'll come back to today. I'm sorry, but I just have to do this because I'm uploading it on YouTube. Just use your Fibonacci trade extension from here to here. We must get to 0.786. Are you getting to here? And 0.786 was exactly, this what's it called, high. So are we going to just come here and retrace? That's the question everybody was asking. But I know that for us to actually take all this liquidity, that means we'll have to extend to one on the Fibonacci trend extension too. So that was what it did, and you saw that immediately we took all those liquidities, billions of dollars left toward the market, but we actually took our profit at 2,100. We don't want to be great to extend here. We're even supposed to take our $2,085 gold. Are you getting? So immediately we got here, that within 1 hour, we actually did what? Immediately we touched all those stop losses, or whatever you call it, liquidity. Immediately we touched it. That was when everything started scattering. That was when everything started scattering. So whatever is happening right now, you should know what is happening. It applies to even to your 1 minute, your 5 minutes, your 3 minutes, your 15, your 30, everything. The way the market is trending is trending perfectly for you. So when you are opening your trades, you first of all take your trades from your higher time frame. So let me conclude this analysis. I'm not doing it for new traders. Are you getting? I told you it's gonna be, anybody that has the knowledge should be able to adapt and understand what is happening here. So we actually done what right now. So since we did an ABC move to the downside, are you getting? What am I expecting? I'm expecting what's it called? Elliott wave 1, 2, 3, 4, 5 to the upside. And what is the rule of Elliott wave? Let me, if I can bring it in. The rule of Elliott wave, that this one, 2 cannot go below 1. Are you getting it? So 2 should be 0.382, since we are changing to the upside to give buyers, are you getting it, aggressiveness to go. 3 always does what? Breaks a major structure. You've heard me saying it before. 3 always breaks a major structure. Now 3 has broken that structure. 4 cannot go below 1. Are you getting it? 4 cannot go below 1. So apart from 4 going below 1, $2,000 was a structure that we'll be trying to break since 2020, but we'll keep coming down. We try to break it, but we'll keep selling down. We try to break it, but we'll keep selling down. We try to break it, but we'll keep selling down. So right now, did it break? That's what we're about to find out. Are you getting? So 4 cannot go below 1, and $2,000 is a psychological level right now that must not break to the downside. So the question is, everybody's asking me right now is, what next? What next is that I've told you that this is an Elliott wave I'm expecting, I'm anticipating to happen. Aside from that, remember that this was an impulse, a retracement, an impulse again. So that is under assurance that this market is massively bullish. This sell was as a result of those liquidations, those stop losses that were taken from 2020. So I expected it to happen. Immediately that we got a take profit from our first 1,913 entry and 1,932, 937 entry again. after we took this profit, I immediately posted on my Telegram group that let's come back to $2,000 because I know it will be aggressive, and I'll show you how aggressive it was when I'm a bit done with this video. So I know that 4 cannot go below 1. So I'll put a support and resistance zone there, knowing that 4 cannot go below 1, but I will be waiting for whatever is going to happen here right now. I know that before any major moves again, there should be a manipulation word process. We are still on a downtrend. There should be a manipulation process because when the aggressive entry, when the aggressive sell started, something actually happened. But because a lot of people don't know or did not finish studying, did not finish studying everything they need to know about trading, they didn't actually know that this was a massive sell up to like even 100 pips to the downside. But because we at Vision X, we have almost all the knowledge intact, from our 8 years to how many years of experience, we came to the lower time frame. So we identified something that happened on the lower time frame. So I'm on the 1 hourly chart right now. Immediately we took those profit. This was our last support. Hold on, worship. This was our last support, right? This was when we were going up. We broke that support. So go and look for this pattern. This is a structure. Are you getting? We broke that support. So what actually happened was that we actually took a trade from here. So we're looking for, we're looking for a sell to the downside. And what was the sell? We started selling from 1970 when we were failing to break above because of this move that was aggressive, and we knew there were liquidations coming. So we first took this sell and took a what's it called, 2040, 300 pips to the downside. So we waited to see if we will change character to the downside. Sorry. We waited if we can change character to the downside, which we perfectly changed. Because this is a massive aggressive, coming to the downside. You should know that this is a sell from 1939 sniper entry. We did that yesterday. I think yesterday. We took that yesterday. To 2011, we took profit. We even used it in completing a consummate trader challenge. Are you getting? Took that profit, knowing that this whole area where are you getting its support area. So what is happening right now? I don't think I can continue this video. Are you getting? So let me just do this and upload. So what is happening right now? You should know that this now becomes a major resistance zone. So when we go to these areas, took profit, we bought back to 1930 again. We didn't come all the way to 1935. I think today, we took this trade again. So we came back to these minor support areas. To me, I consider this as a minor support because the market actually came back and recovered it. Are you getting? So came back to this resistance. Now we came back to this support, but again, we took this trade from 2020 to 2030 on that 100. So what now? What now is that liquidity consent needs to happen for the next major move that is going to come up, because this is still what a massive aggressive trade. So I dropped down to a lower time frame to show you whatever is happening here. To me, this market has been failing. Are you getting this? So I put a liquidity 2 to it. Then on the downside, this market has been failing. I put a liquidity 2 to it. So liquidities at the bottom. Liquidities as a bottom, then liquidity at the top. Are you getting me? So just do what? Take both the liquidity at the top and the bottom away from me. So let's just say, since it's an uptrend, the rule is that since it's an uptrend, I guess overall on the daily, since it's still a bullish market, the market needs to first of all do what? Take the liquidities to the upside, take all this liquidity to these supply zones, then come down, take it to the downside again. Are you getting it? Then continue the market going. So this is what I have. Are you getting it? This is what you should know going further in your trading journey. Are you getting it? There must be liquidity. They need to shake everybody that's been buying from these places, early buyers out, before the market continues going. But on the other hand, the market can just continue expanding and reclaiming and turning bullish again, changing character to the upside, retesting here and continue going on. That is if it has touched a particular support level. I don't have time, so let me take this off. Or let me just drag this on your face. Have we gotten to a retracement levels? I don't know. Let me use my Fibonacci trend extension tools. From where we are right now, from 1937, extend to here. we are actually in what the Q zone. So I'm expecting us to recover this place to continue going or come back to form a double bottom or something like that to continue going. Are you guessing? So I think I just have some few minutes to go, few seconds to go. So I'm expecting this liquidity concept to play out. So these are things you should know because this is still liquidity at the bottom. Are you guessing? To me, this is still liquidity if I should go to the what's it called? The major liquidity is still at the downside. So if it does not come and take it, that means that's gotten enough liquidities on enough money to continue to $2,200. So we're expecting a buy from $2,000 to $2,200. That's 2,000 pips. Any moment from that, it might happen this December, the end of December into January, even February. But we don't care about the time it takes. All we care about is that making an impact to the upside. So this is what I have for you. If there's any other questions, you know where to reach me on my Telegram channel and every other place. Take care and bye. Should I say bye-bye right now? Okay, this is what I'm anticipating. 200 pips to the upside from 2020, then 450 pips to the downside. Taking this last because this was where the buy started from. You need to come and take it. Immediately we are taking that 2007 to 2004. We should know what find is a lower time frame, 15 minutes shift. Once I see that shift, I buy, take an aggressive entry and continue. But immediately we are recovering here, you should know that that's safe haven to 2,200, fifth leg of the ELLIOTT wave because 4 must not go. Take care and bye for now. Bye bye.